Insurance Administration's fraud presentation. My name is Joe Smith, and I'm the Assistant Chief Investigator for the Civil Fraud Unit. Joining me today is Steve Wright, the Associate Commissioner for the Fraud Division. Just a second, bear with me. I'm trying to advance the slides. There we go. Today we'll discuss several types of insurance fraud, including auto, homeowners, and contractor fraud, certificates of insurance, and public adjusters. We hope the information is insightful and helps you identify fraudulent activity so you can protect yourself. The Maryland Insurance Administration is a state agency that regulates insurance in Maryland. The MIA licenses insurance companies and producers, examines the business practices of licensees, and ensures, monitors solvency of insurance companies, reviews and improves insurance policy forms and rates, investigates consumer and provider complaints and allegations of fraud. The Fraud Division is divided up into two units, the Civil Fraud Unit and the Criminal Insurance Fraud Unit. A person who has been found to have committed insurance fraud based upon a showing of clear and convincing evidence, the Commissioner may impose an administrative penalty not to exceed $25,000 for each act of insurance fraud and order restitution. That is the penalty under the Civil Fraud Unit. The civil fraud orders are public documents. Investigators work with an Assistant Attorney General to prosecute cases at civil hearings. For the Criminal Fraud Unit, a person who has been convicted for a violation of criminal statute based upon proof beyond a reasonable doubt may be subject to fines and imprisonment. Criminal investigators work with assistant state's attorneys in the 23 Maryland jurisdictions to prosecute cases, or with the Criminal Division of the Assistant Attorney General's office assigned to the Fraud Division. What is insurance fraud? Insurance fraud occurs when someone deceives an insurance company or a consumer in order to make money. Insurance fraud is knowingly and willfully presenting a false or fraudulent insurance application or claim, a crime subject to fines and jail time. Insurance fraud can be divided into two major categories: in fraud by an insurance entity or fraud against an insurance entity. An example application fraud would be when applying for insurance, lying about where a car will be garaged for lower premiums. For example, saying your car is garaged in Maryland when it is actually kept in New York, or saying it is garaged in Baltimore County versus Baltimore City to secure cheaper insurance rates. Or lying on a life insurance policy application about a diagnosis or medical condition. Claims fraud. There is soft fraud in which you have a legitimate loss but embellish the value of the item or the extent of the injury. And hard fraud, a loss never occurs in its entirety. We will have several more examples coming up in the next several slides. How does insurance fraud impact you? The FBI says insurance fraud costs the average U.S. family between $400 and $700 a year in the form of increased premiums. When insurance companies lose money due to fraud, they pass these costs on to their policyholders in the terms of higher premiums. Fraud by an insurance entity. Fraud by an insurance agent, insurance company, employee, or someone posing as an authorized representative of an insurance company. Examples include fake and false documents. An insurance agent or an insurer issues a fake policy, certificate, or insurance identification card. False statements. A producer or consumer makes a false statement in the sale or issuance of a policy or on an application itself. Pocketing premiums. An insurance agent or insurer pockets the premium and then issues a phony policy or does not issue a policy at all. Selling unauthorized insurance. It is illegal to sell unauthorized insurance products. Policies sold in Maryland must be approved by the Maryland Insurance Administration. Premium diversion. Premium diversion is the embezzlement of insurance premiums. Generally, an insurance agent fails to send premiums to the underwriter and instead keeps the money for personal use. Another common premium diversion scheme involves selling insurance without a license, collecting premiums, and then not paying claims. Churning, an illegal practice where insurance agents unnecessarily replace existing life insurance for the purposes of earning additional commission. Your agent offers to sell you a policy with a larger death benefit than your current policy. The agent says you can buy the new policy at no additional cost. Your agent fails to tell you is by switching to a new policy, you are using the cash value of the old policy, money you could have used to address many financial needs. Fraud by policy holders, medical providers, or other service providers against an insurance company to receive money by filing a false claim or inflate a legitimate one. Arson for profit. A business, home, or vehicle is intended by the owner or someone acting on behalf of the owner to collect the insurance premiums. Disaster fraud. An individual persuades a disaster victim to claim more damage than actually occurred. Creating a fraudulent claim. Staging or intentionally causing an auto. Exaggerated claims. Overstating the amount of the loss. These can include inflating bodily injuries from an auto accident or work-related injury, inflating the value of items taken during a burglary or theft, inflating a physical damage claim from a minor fender bender, and medical providers inflating billing or upcoding of medical procedures. Medical fraud. Medical providers bill insurance companies for services they did not provide or inflate the billing for services. These scams frequently are connected to automobile accidents or disability claims. False health claims. Knowingly making a false statement or representation in a health insurance claim or application by a patient or a provider to an insurance company or to a state health plan or program. Auto insurance fraud. Common stage schemes. The drive down, a scheme in which the driver waves on another driver, indicating it is okay to proceed, and then intentionally hits the passing car. Hit and run. Using a pre-damaged vehicle, criminals claim they were in an accident and cannot identify the other driver, often calling police to verify. Sideswipe. A driver in the inside lane of a dual left turn lane in a busy intersection drift into the outer lane, intentionally forcing a collision. And the swoop and squat. This scam occurs when a vehicle you are following is suddenly passed by another vehicle that swoops in front of it. This causes the vehicle in front of you to stop abruptly or squat. As a result, you are unable to avoid a collision, causing a rear impact. Stage auto accidents with fake reports of injury. Jump in, passengers who are added to the claim and or accident report but were not in the vehicle at the time of the accident. Exaggerated injury claims with prolonged treatment. False reports of theft. Vehicle damage is enhanced after an accident. Vehicle damage claims for pre-existing damage. Vehicle is garaged in another town than it is listed on the policy. Making claims that occurred before the policy period began, but changing the date to reflect after the policy was in effect. False report of a hit while parked accident. The upcoming videos are dramatizations of auto insurance fraud schemes.
So, what did you do with the car?
Look, we want to get out from under the payments now. It's all taken care of. I told the police, the insurance guy, it was stolen.
What?
Yeah, now the insurance policy will cover the rest of the payments.
But that's insurance fraud. You can go to jail for that.
Lying about an auto claim is insurance fraud.
Hello?
It's a crime.
The police found the car. They want to talk to you.
And we're cracking down on those who commit it. Who pays for insurance fraud? You do.
Bad news about your car getting nailed.
Not really. The insurance company will take care of all that. And then some.
What do you mean?
When I get a big fat check out of this, told my doctor, my lawyer, I got hurt.
But you weren't even in the car when it was hit.
Well, the insurance company doesn't need to know that, do they?
Lying on an insurance claim is insurance fraud. It's a crime.
Man, you're just asking for trouble.
Who pays for insurance fraud? You do.
What to do if you are involved in an auto accident. If you are able to, photograph the accident scene and vehicle damages. Photograph the identification of the other involved parties while exchanging information. Identify witnesses. The form that you see on the screen here can be located in the Maryland Insurance Administration's Consumer Guide to Insurance Fraud and is located on the Maryland Insurance Administration's website. Protect yourself. Notify your insurance company of the accident as soon as possible. Make them aware of any suspicions you have related to the facts of the accident. Homeowners insurance fraud. False reports of theft of property in a home or vehicle, exaggerating the value of stolen items, or submitting falsified receipts for items reported, intentionally damaging property, inflating the estimate or bill to cover the policy deductible, concealing that the residence is used as a rental property. The next video is an example of soft fraud related to a homeowner's claim where an actual loss is embellished.
Yeah, they broke in and stole my laptop, stereo, TV.
Your insurance covers that, right?
Yeah. And thanks to my insurance company, we'll be watching all the big games on a new 46-inch screen.
How's that?
Well, that's what I'm going to claim was stolen.
And that's insurance fraud. That's serious stuff.
Come on, who's going to know?
Lying on an insurance claim is insurance fraud, and we're cracking down on cheaters who commit this crime. Who pays for insurance fraud? You do.
Medicare fraud. Protect your Medicare number and Social Security number. Treat it as if it is a credit card. Remember that nothing is ever free. Do not accept offers of money or gift for free medical care. Ask questions. You have the right to know everything about your medical care, including the cost billed to Medicare. Educate yourself about Medicare. Know your rights and know what a provider can and cannot bill to Medicare. Use a calendar to record doctor's appointments and what tests or x-rays you get. Check your Medicare statements carefully and make sure that you got each service listed and the details are correct. If you spend time in a hospital, make sure the admission date, discharge date, and diagnosis on your bill are correct. Tips to prevent Medicare fraud. Be wary of providers who tell you that the item or service is not usually covered, but they know how to bill Medicare for payment. Make sure you understand how a plan works before you join. Check your prescriptions before you leave the pharmacy to be sure you got the correct medication. Is it a brand name or a generic? and did you get the full amount? If you did not get your full prescription, report the problem to the pharmacist. Do not allow anyone except your doctor or other medical provider to review your medical records or recommend services. Do not accept medical supplies from a door-to-door salesman. If someone comes to your door claiming to be from Medicare or Medicaid, remember that Medicare and Medicaid do not send representatives to your home to sell products or services. Tips for preventing Medicare fraud. You can contact 1-800-633-4227 or contact your Maryland State Health Insurance Program.
Hey, I see you got everything fixed from that storm. Oh, I got it all right. Contractor said I had hail damage and my insurance would pay for everything. I'd even get my deductible back. Are you allowed to do that?
Watch out for home repair deals that seem too good to be true. These might be insurance fraud.
Turns out he did extra damage to my roof, then lied to my insurance company. He's been arrested. And he stiffed his suppliers, so now they're coming after me for the money.
Insurance fraud, the crime you pay for.
So as you see, most contractors are honest, but learn the warning signs of a swindler and how to protect yourself from a fraudulent contractor. Obtain 2 or 3 written repair bids if possible. They should include all costs, what work will be done, schedule of completing the work, and guarantees. Do not simply accept a bid just because it's the lowest. Low-ball bids, such as a special hurricane deal or limited time offers, could be fraudulent. Do not pay for repair bids. Crooked contractors may simply take your money and disappear. Most reputable contractors do not charge simply for bidding on repair work. Use established local contractors if possible, but be careful if the contractor arrives in an unmarked vehicle, seeks your repair work door to door, or tries to cut costs by using materials from another job. These contractors may be unlicensed, dishonest, and untrained. Ask for references. Check with your insurance company to make sure your policy covers the repairs. Also, have your insurance adjuster estimate the damage and probable cost of the repair. This will give you a reliable basis for negotiating repairs with the contractor. If practical, have an adjuster from your insurance company inspect your damage before repairs begin. Your insurance company may require an adjuster's inspections before you repair. Your insurance claim could be denied if you make expensive permanent repairs before an adjuster inspects the damages. Ask to see a contractor's required state or local license and write down the license number. Ask contractors for proof that they have liability and workers' compensation insurance. Get a signed contract before work begins, but do not sign any contract with blanks. A dishonest contractor could fill in unfair or fraudulent terms later. Make sure you obtain a copy for your files. Do not pay a contractor in full before work begins or before it's finished. The contractor could disappear with your money, leaving your repair job unfinished. Normally, you should only pay about 20% or less up front. Never pay in cash, only with a check or credit card. A contractor who demands cash may be trying to avoid paying taxes or buying the required insurance. Certificates of insurance. A certificate of insurance is a document used to provide information on specific insurance coverage. This document generally contains information on type of insurance, limits on coverage, the insurance company, policy number, named insured, and the policy effective date. Always ask for a certificate of insurance. Independently verify, as we have had a case in which a fraudulent certificate was presented and the phone number was to the contractor or co-conspirator pretending to represent the insurance company and falsely validating the existence of the insurance. If the contractor is not insured and someone is injured or something is damaged, it puts you at great risk to pay. Insurance companies have their own adjusters who will evaluate your property damage and walk you through the claims process. You can also hire public adjusters to help you file claims and negotiate with your insurance company. Public adjusters represent you, the claimant. Most licensed public adjusters are honest and competent, but some who are unlicensed may come from out of town and go door to door trying to bilk disaster victims with insurance scams. A public adjuster must be licensed in Maryland. A licensed adjuster can investigate, appraise, evaluate, give advice, or assist a customer in adjusting a claim and negotiating with the insurance company. A general contractor without a public adjuster's license cannot legally negotiate a claim with the insurance company. We have investigated individuals and companies that present themselves as or claim to be public adjusters when they are not licensed. Unlicensed individuals may try to take advantage of disaster victims by charging a large upfront fee and then disappearing with your money, referring repairs to dishonest contractors for a kickback, which also may result in poor quality repairs, filing false or inflated claims against the policy, which may delay a settlement with the insurer. Unlicensed public adjusters, if you are ever solicited by a person or company to help you with an insurance claim and or make repairs after your property is damaged by fire or natural disaster, make sure they are licensed. Report insurance fraud. Customers are encouraged to report suspected insurance fraud to the Maryland Insurance Administration, and you can remain anonymous. The number is 1-800-846-4069. Thank you. If there are any questions. Somebody had asked if we can get a copy of the slides. They will be posted on the Maryland Insurance Administration's website. So yes, they're available. Okay, I see no further questions. I thank everyone for joining us for this Protecting Yourself Against Insurance Fraud session, and thank you. Have a good day.